Alright guys, welcome back to Only Divergences. Today is Friday, November 19. This will be a quick video on the S&P 500 because we will have the weekend video where we go into more depth of what's going on, as I've been talking about. I'm still debating how much I want to say in that video because sometimes too much analysis can confuse people. As of now, the analog remains intact. We've been tracking this current bull move and comparing it to this previous one here, and surprisingly the analog is remaining remarkably intact. One thing to point out is that we have the NASDAQ. I'm not going to show it here, but the NASDAQ has been outperforming the S&P 500 a lot recently. And while I'm not using the NASDAQ as an analog, it has deviated a good amount from the May, this move here, the March, April, and May move. Again, something we might talk about in the weekend video. What matters is that the analog remains intact. In fact, I'm going to put us side by side here so that we can see the comparison a little better and in more detail. So we can see that the current move here is on the right and the analog is on the left. Let me just get rid of this one here. There we go. Analog from March and April is on the left. Actually, I should start saying it, April analog, and the current move is on the right, and we can see we had a big thrust off the lows, consolidated before we had a pullback. So, in line with the analog, we were not expecting any big moves this week, and that's exactly what happened. Despite the fact that we had Apple, Amazon, and other bigger names rise significantly higher this week, the market kind of stayed flat. I haven't looked into it, but I think it's because energy and financials, which are another big component of the S&P 500, did have some pullback, some material pullback this week. But if we look at the analogs in the S&P 500, we can see that we're in a good position here for the analog to continue to some extent. Okay. We take a look at the moving averages, and where are we? Well, we're above the 5, came down to the 10 here, similar to what we were doing over here, trading well above, touching the 10 a little bit, but staying above the 5, similar here. And even take a look at the indicators that I use. So first the MACD, big thrust open, coming down, and we can see red starting to appear, similar to here. We had big thrust come open, come down, and then red starting to appear. So we wanted this red to appear. In fact, we want more red to appear before we're ready to take a short position. So I'm really only going to say two things in this video. The first is that if this analog continues, well, we should expect some volatility next week, something like this. And really, if we are in the analog, an objective measure that we can say is that, look, the week after the consolidation week, we had price come down to the 20 here, right? This green line here. So for the analog to be intact next week at some point, probably later in the week because of what we see here, we should expect price to come down to the 20-day moving average, exponential moving average, right? So that's an objective measure. And if that happens, then, really, how can you deny the power of these analogs? Personally, I would want the market to move a bit higher before I would be ready to short, just like in the analog. But again, I have to go deeper into the hourly, and I'm not doing that in this video just yet. The second thing that I want to point out relates to my overall broad view of the market. I've talked about that briefly once or twice, but I know a number of you have pointed out that you're interested in kind of the bigger picture sort of thing. I think there remains good upside before the top or even before the next material correction. So 8% or more, like we had in October. I think that there's still more room. Now this will make sense only to a few of you, particularly probably the loyal subscribers, the ones who understand the methodology and have engaged with me either in the comments or on Twitter, just kind of talking about the subtle nuances of this sort of contingent analog-based perspective of markets. And especially if you've come to understand this methodology with the DMI, which again, spend an hour studying this indicator every day if you do analysis. Now, before I show you this chart, remember that overall, this DMI tells us a number of things that we can apply to almost any charts, right? And that is a trend reverses when green comes down to this oversold or overbought, position, but it's got to come down quite a lot, as we've seen in the past. That's when we start to see moves lower, or at least, limited upside potential afterwards. It's not always the case, but it's a good probabilistic measure. And also that corresponds usually with an elevated red and sometimes with an elevated black, indicating trend strength. So you get elevated black when you have strong trends on that time frame, right? So this is the big picture view. Okay, I'm going to take I'm going to take a look at the quarterly time frame of the SPY going all the way back to 1993. The reason I'm using the quarterly is because it's the biggest time frame that can give me any sort of signals, right? And again, we're going to do this on the weekend video, but this is just a quick look here. And what do we see? Well, since the low in 2009, which I think is a good starting point, the market has moved higher until we've gotten elevated red, right, and low green, right? So you can see the market struggles. Every time we approach this area where we have elevated red and low green, the market struggles. Or to put it another way, you don't have to worry about selling until we've gotten to this kind of elevated red, low green area. Same thing here in the blow off in 2018. And then the pullback, and then the real bear market. Well, not really bear market. It was just a 20% pullback here before we continued. But again, that came after low green and elevated red. COVID, we saw green was falling for some time, elevated red, and now we see green has been falling for some time and elevated red. Right now, just because we are here, that does not mean that we cannot continue to have further lower green and further elevated red. But if we have a top, a material top, you will want to see it on at least the quarterly with these reversal measures, right? So, again, this is just objective, right? It's all the time. It's right here. You know, you might get some pullbacks in between, but if you look at only the quarterly, that's all that's going to register, right? And this suggests, yeah, it looks kind of like this, right? You know, we got red above a rising black and green coming down, red above a rising black and green coming down. You know, it's possible, but I'm not sure if we're there yet. And we can determine this by going deeper into the monthly and the weekly time frames. But again, I'm not going to do that. I'm going to do that on the weekend video, likely on Sunday. So make sure you subscribe if you want to see that video. Obviously, there are two topics here, right? The first is the potential for a trade next week and the week after, based on the analogs. So, you know, to go short and the long, short and the long, short and long. You know, if the analog plays out, which again remains a falsifiable hypothesis. And the second topic is this bigger picture idea that I just laid out, which I guess is for more the buy and holders and the ones who want to know if the market's about to roll over, which you know, it hasn't rolled over in any material way since COVID plunge. And again, that was an exogenous event, right? So we have to keep that all in perspective. So that probably means I'm actually going to put out 2 more videos on the weekend, one on the potential trades coming up in the next 2 weeks, or rather I should say the potential moves, because I don't want people confusing what I'm talking about here, and the potential for a view of the larger term picture of what's going to happen in the S&P 500. And again, that's really important because you always want to have context whenever you understand where you are in the market. And bigger picture stuff always provides you with a better understanding of what could happen next, even if you're going to be trading in the meantime, right? There's no harm in doing that. Okay, so that's what I'm going to get at on the weekend video. That's it for now. You know what to expect. Just continue to track this analog. I'm going to get into the hourly over the weekend. I haven't even looked at it myself personally. So again, just a quick video here on Friday. Hope you guys had a great trading week. There was lots of opportunity. And I hope you made money this week. And I hope you'll make money in the next 2 weeks, because I think the opportunities are going to be pretty big. Anyways, thanks for watching, guys. I'll see you on Sunday. Take care.